Good evening, guys. Hope everyone is good. So, we've just had the FOMC meeting, and Fed, Fed Chair Powell, he was saying they are going to reduce the balance sheet runoff by 80%. That's the big news for it. So, what does this mean for us? So, imagine the liquidity of the American market, which is the biggest market, is a swimming pool. So, right now, the Fed is spitting water out of that swimming pool using a water pump at 100%. It's just spitting it all out. It's flying out. They're trying to take out water from the swimming pool. And this is the equivalent of removing money from the economy. And now they've said, instead of doing this at 100%, reduce it to 20%. So it's still removing money from the economy, but it's reducing it so much more, so much less now. And you can see it. This graph is the balance sheet of the Fed. So you can see during COVID, they absolutely printed so much money. And now they realised they've got to reduce it all. But if we look closely, look how steep this was. And now look, you'll just see it very closely. But it's starting to flatten out. This is a very good sign. This is the start of the end for quantitative tightening, and then we'll maybe get a flattened out area here, and then once they start printing money, this will start going up again, and with that all risk on assets go on. So this is a huge moment right now. The end of this decline is coming. It's starting to round off, which is a brilliant sign for us, and it's just in time for what's been happening on the bigger picture. We've seen it's been a huge head and shoulders here. It's a breakout and retest. While we knew this was a retest, I think what the general public need is a narrative behind it so they can understand, okay, so this is good to happen here. They can't see it in the charts just yet, but you can always see it in the charts before it happens, because the big money are positioning themselves in these charts. And what happens is we're left with the breadcrumbs. You know, the likes of me and you, we're fishing around these charts looking for clues. And the big money leaves the breadcrumbs. And on the big high time frames, it's hard. If you're on the 5-minute ones or the 15 minutes, you can get thrown off by the noise, but it's really hard to manipulate the long weekly, monthly time frames, because that's where they position themselves in major points. So we've got the breakout and the retest, and now we've got the good news coming from the FOMC that the balance sheet is going to start rounding off. And as you can see, once this starts increasing, that was the start of the bull market, and alts started flying. So this ties in also with how Bitcoin's looking. Now, you know that we're tracking global liquidity on 2 levels now. We are currently using an offset of 77. And this shows the breakout coming out end of March. And we can also use the offset of 105. And this shows the breakout's going to be end of April. So we've got a 1-month period where the global liquidity is increasing. And look at that, guys. If you didn't clock that, look. It's just broken all-time highs for global liquidity. This is a very good sign. This is what's to come. The big move has been coming. We've been tracking this and following it, and we're starting to see it out now. So we've been knowing about it. We've been on this, but now the FOMC is now publicly announcing it, where we were tracking already in the charts. But now they're announcing it to the world. You know, we are slowly rounding off our balance sheet, and that will give the signal for the people in the know to, okay, it's time to start moving risk on. And once price starts moving up, more people start coming in. But we have a window here of a month, end of March or end of April, and we'll figure out when this blows. And if this goes straight up, we can use the 77 offset with confidence. But if this goes up and then comes back down, maybe for a double bottom, or ranges a wee bit longer, we can now move to using the 105-day offset. So I'm monitoring both of these because I'm waiting for the market to show the hand which one it's going to be. And once it does, I'll move to that day offset as my primary focus and the kind of spine of what's going to happen. So that's on the bigger picture things. The bigger picture is looking good. We've got a break, retest. We've got the good news from the Fed. We've got the balance sheet rounding. Superb. So let's get on to the daily. Let's get into the liquidity levels. So, how are things looking? We've had Bitcoin come down, low, higher low, higher low. This is very good. It didn't tap our liquidity level where it did, which I thought it might because it's left that liquidity up there. But we can see it's just gone straight for it, straight up and taken it. Around about 85, 86, that's where our level was. Superb. Now, that's on the weekly for the liquidation map. If I go on the 2 weekly, we've still got another liquidity level at 87. Around about here, this is marked up on the chart. What we need is this volume to start turning up. Now this volume was coming down. It's a 7-day moving average, so there's a little bit of a lag. But I think with this good news, you might start seeing this round off and start moving up as well. That's what I'm predicting, because this is the news people have been waiting for, investors have been waiting for. It's not an injection of liquidity, but it's the tightening, the stop, the choking of the markets is stopped. So we're basically going to be break even. We're going to be neutral now. We're not going to have a hand around their throat. So this is good news, and people start loading into it, because once the pause happens, we know the pause is coming, and then from the pause, the quantitative easing will start happening. So it's a step process, but by knowing this pause is happening, the choke around their throat's off. So people start loading, knowing that the easing will be coming at some point. So let's have a look at the daily. You can see the short squeeze up, everyone started getting liquidated there, and we're building up a lot here on the daily. But if I look at the 7-day, you can see it's moving up, it's taking the liquidity off everyone, and there's a couple of longs building up here. But on the 30-day, it looks relatively even, doesn't it? So if you look at the red line here, that's people betting the market's going to go up. That is currently sitting at 2.5 billion. And if you look at the people betting the market's going to go down, that's currently sitting at 2.4 billion. So it's relatively similar, with a similar spread as well. So it's going to be interesting how Bitcoin decides. I think if we see an increase in this volume, you're going to start seeing Bitcoin push up. But if we don't see an increase in this volume, you're probably going to see Bitcoin push down and take the liquidity. So I think that's what we want to look for next. I think the trick is going to be, is the volume coming in? I think the volume's going to start coming in soon with this good news. It's just the people that have been sidelined, they've probably been waiting for this moment. Okay, the throat's now off, because it's like say you want to run a race, but you've got to run a race. I'm going to race you, but I've got to hold a 25 kilogram weight. You know what I mean? You're like, oh, what's the point of me racing? It's a disadvantage. So I think a lot of investors have been waiting for just that kind of chokehold to come off, and then let it start playing again. And we've also got price breaking above that trend. That's what we really want to see, because this trend here is held well, and it's faked out, it's retested, it's faked out again. A lot of people have been shaken out here. So if we go on the weekly, this looks good, because this is coming to a point. So you've got the big, look like the fake out, it's come right up, it's retraced and swept the lows, and it's now a fake out, but it's produced a doji candle, which is a reversal candle, right next to a huge wick reversal candle. And I was even talking about, it was maybe last week or the week before, when this was, it would have been last week, because this was almost printing the doji candle. I was saying it's quite common to see a huge candle down, doji, huge candle up. So we'll keep our eye on that one. But this almost looks like, if we are using the global liquidity of the 77-day, I can't use it on the weekly. You know, the break is out at the same time as this. So it'd be absolutely perfect to come down, fake out, right at the point, and then just send it up. So, two things we're looking for. The volume in the exchange to start moving up. That's the first one. And the second one, we need to see this break up. And does it hold? Or does it carry on? Does it consolidate? Because if it does, it kind of moves up. We know we're using the 77-day. But if it pops up, then comes down, this is more likely going to be the 105-day liquidity. So there's a couple of things we just need to keep our eye on the markets now. But got some good news. We've managed to stay in the market when everyone was fearful. We didn't get shaken out. We've done honest analysis every single day. Hopefully kept you guys in the market. And if you like this kind of analysis, please like and subscribe. I do these videos every day. I navigate us through the very turbulent times, and I've got my own system. When it triggers, I'm going to be getting myself out of the market, because I'm not trying to sell anything here. I am here to get myself out of the market, make my money, and retire happily ever after. So, and while I do it, I might as well let everyone else know. So, if you're into that and you like the sound of this, please like and subscribe, and same time tomorrow, guys. Cheers.